Hello everyone and welcome to today's webinar. In this session I will show you one of the simplest ways of creating clients in Truth using templates. Templates are preset formats or structures for the types of clients that you want to create. In other words, a skeleton or template structure for your typical client. They can contain anything you like, such as houses, cars, children, as well as policies and investments. You can specify investment returns using a template, and even prefabricate dynamic lifestyle key dates, such as retirement or downsizing. Some of these benefits are, perhaps, for another session. Today we're going to focus on actually setting up your new client, from finding a way around the system to understanding each of the assumptions you'll be making and their impact on your client's cash flow. So this is the main interface for Truth. Across the top you will see a ribbon containing a number of buttons, similar to what you would see in Microsoft Office applications such as Word or Outlook. Hopefully this is a format which is familiar to most of you and easy to understand. Above the ribbon we can see some menu options: File, Clients, Calculators, Report, and Contact History. As we progress through today's session, we'll see the options here will change. For example, when we're working in a client, we will see a planning menu appear. In this session, we will primarily be using the Clients menu and the Planning menu. We're currently looking at the Clients menu, and you can see there are options allowing us either to open an existing client or create a new one. There are two ways of accessing this new client option. The first is by clicking on New Client here. If we go to the back arrow at the top left, then you'll notice that clicking on the File menu option takes us to the same menu bar and hence the same New Client option we saw previously. The first thing to note about the New Client form is this option at the top, Starting Template. As I mentioned at the beginning, using a template allows us to quickly and easily set up a new client record using prefabricated options. I'm going to select the template, which is called Template Basic Data. You notice it has a number alongside it, so that happens to be -44. Template clients always have a negative number, allowing them to be distinguished from actual clients. Having selected our template, we're now going to fill in the personal details. The majority of this should be relatively self-explanatory, but a couple of these fields deserve a little further explanation. However, let's start with some basics. When it comes to the usually known as name, this is a name by which we refer to someone throughout the software. For example, if your client's name is Peter, but he prefers to be called Pete, then enter Pete as his usually known as name would mean that that name appears throughout the software. You can amend this and all update, of course, at any time from the fact find. The retired toggle allows us to specify whether our client has already retired or not. If a client is not yet retired, perhaps they might want to look at the possibility of retiring at different dates. One of the most powerful tools in Truth is key dates. As we expand the list of key date options, we can see that these are dynamic lifestyle dates which can be adjusted live in front of your clients during meetings. They can be called whatever you wish and amended at any time using the software settings. But you notice that we have two key dates already set up here, which have come, of course, from the template. These are retirement, i.e. when the client intends to retire, and later life, i.e. when the client might want to change their spending post-retirement. Remember, these are dynamic lifestyle dates, which allow us to vary, for example, future spending patterns. Remember the date when they might have a change in their earned income, or when they might crystallize their pensions. If we are creating a client who has already retired, then it might not be appropriate to have a future lifestyle date called retirement. What we can then do is move the slider over to yes, and then choose the key date for later life to indicate that future lifestyle changes would instead occur at this date. However, in this instance, we're going to say that Peter is not yet retired, and so we want to choose the retirement key date, and this date will then show us the default for the client's age here. And if we enter 65, then of course that will be the age that the key date will be set to initially. When it comes to projection up to age, you've got to remember this isn't the same as a life expectancy. Your client might already have strong feelings about this. Perhaps their parents lived to their late 80s, or they feel that an average life expectancy of 85 would be sufficient. But what if they're not average? I have found, after nearly 30 years of producing cash flow models, that projecting up to age 100 works well in most cases. Even if a client doesn't expect to live that long, showing that they would still be financially secure if they were to, inspires a massive amount of confidence. Of course, as with all of the decisions we're making here, projection up to age can be changed at any time from the fact find. Now we come to the projection settings. These are the most important throughout the whole of the system. The most advanced options we're going to look at certainly today, but they do have an impact on the cash flow projections. The assumed inflation rate will be used throughout the system for your client. It will affect the increase in the cost of their household expenditure. It can be used to index values such as their salaries. It can be used as a basis of escalation of tax rates and the lifetime allowance of pensions, among other things. It's important to remember that this is a long-term projection, and it might not always be appropriate to use current rates. Many of our clients are using a rate between 2 and 3%. The higher the inflation, the more expensive your client's future lifestyle will be, and the less real return they will get on their investments. In other words, higher inflation gives a more conservative or cautious model. In this case, I'm going to leave it at 3%. The assumed net future return is what we apply to any surplus accumulated income, implying that spare income will be saved and invested. This could be regular spare income or one-off income from the sale of assets. Any income which is not allocated for spending or being invested will fall into the surplus account and have this net future return applied to it. This return is not net of inflation, but it is net of tax and charges, because a surplus account will represent a spread of investments. Some may be tax favoured, but some may not. The overdraft rate applies when the surplus account has been depleted. If a client overspends, then the surplus account will be reduced. If it runs out completely, then in reality, the client would have to start taking capital from their liquid assets. You can, of course, withdraw capital from items and in any order that you wish. You can choose your own erosion sequence. But if no specific erosion sequence has been specified, then the software will negate the liquid capital by turning the surplus account into an overdraft, keeping a tally of how much capital would have been spent. And because the savings and investments are not actually being reduced, growth will still be applied to capital that would have been spent, and so we use the overdraft rate to negate this lost growth. Hence, the overdraft rate should be the same as a weighted average investment return. So for this client, I want to use maybe slightly higher figures, which will represent, of course, their attitude to risk and loss. To avoid confusion when setting up new clients, we do recommend sensible defaults for these three rates. Now, you can set those defaults at any time from the software settings option on the side toolbar. We can choose to omit the partner and add them later, which is the default option. If you are thinking of adding a partner item, then it does make sense to add them now rather than trying to add them later. So we're going to complete the partner's details. Now we've input all the data required to set up a new client. Let's click on the Create Client button at the bottom. As you can see, we're now taken to the Select Client screen with our newly created client pre-selected and their key details pre-populated on screen. There are a few options on the screen that we could look at, but that is for another time. For now, let's just click Open, which will take us to their fact find. Truth templates allow you to choose the level of detail you would like for your model as a starting point. You can then add more details if you wish. You can produce any kind of financial plan, ranging from a very basic client, as we'll look at in today's session, up to an incredibly comprehensive one. The amount of detail you need to input will vary based on your financial planning style and the needs of your clients. The fact find screen here is your data entry hub for Truth. This screen allows us to enter, amend, view, filter, search, and review all data that we hold in the system for our clients. In this session, we'll primarily be using the client-facing statements to enter and modify data, which are these across the top here. But let's take a quick tour of the fact find, which is this screen here, while we're looking at it. On the left-hand side, you can see a series of folders in a tree structure, which should be familiar to you if you use, for example, Outlook or even Gmail for your emails. If we select Entire Fact Find at the top, then we get to see absolutely everything. In the bottom left-hand corner, you'll notice that there's a number. This tells us that there's 17 items in total for this client. These items have all come from our template. This client has just 4 policies, as we can see from the Policies folder on the left-hand side. If we click on this, we can see that we can filter the view to show just these 4 policies. As we apply different levels of filter, the preview information, these columns across the top, will change. And of course it becomes more specific. If we want to add a new item, we need to navigate to the end of the branch. So, for example, if we wanted to add a certain type of policy, let's say a personal pension, then we need to choose what type of pension. So we'd expand pension on the left. And if we wanted to add, let's say, a personal pension, then we'd choose personal pension specifically. Then, and only then, do we get a chance to add by using either this add option here, below the existing list of items, or this add option over on the right-hand side. Okay, so let's have a look at how we modify data from the fact find. I want to go back and look at employments now. From the employments list, what we can see by filtering on the left-hand side, it gives us the information currently in their data. And we get a chance to review what information they have. Remember that these items have come from the template. If either the client or the partner does not work, we can, of course, delete unwanted items by selecting them and then either pressing the delete key on our keyboard. Of course, we have to confirm deletion, or we can use the delete tool over on the right-hand edge. In this instance, we're going to keep both employments, but we will change descriptions and values. Now let's start with Peter's. To amend the item, double-click. We can see here that the key information has been pre-populated for us from our template. The client is selected as the employee, and our employer shows as C's employment. Now, whenever you see a capital C or capital P in these curly brackets in Truth, we'll apply those usually known as names that we looked at earlier, either for the client, C, or partner, P. In this case, we'll see Peter's employment whenever this item feeds through to our model. But let's amend the description. We can type in whatever we like here. The more personal detail we input into the model, the less generic the data becomes, and hopefully the more engaging a picture we create for our clients. So, go. Let's also pop in a salary figure. And I'm going to use a figure of £80,000. And then a bonus of £10,000. We want the employment to end on our dynamic retirement key date. To choose a key date in a date field in Truth, simply click on the drop-down arrow in this list box next to the All Age box. And you can see here we can choose from any of the available key dates. But the one we want is retirement. We do need to save our changes, so let's click Save here, and that will save and close the item. Okay, so now we can do the same with Jane's employment. This time, let's leave the description alone and just amend the salary figure. So I'll put in Jane's salary as, let's say, £60,000. If we wanted to, we could create a new key date for when Jane retires. So, of course, that means they could retire at different points, different dates. For the purposes of what we need for today's session, I'm going to assume that they will both retire at the same date. So I'm going to use the same retirement key date. But remember, if you do want to add new key dates, you would do so under the Settings option here at the top. So, of course, again, we must remember to save the changes. Now, let's look at their property and enter a value for the property. Okay, so on the left-hand side, we're going to Properties. That filters the list of items, and we're going to double-click on their property item. Once again, changing the description allows us to make it more personal and create a more personal picture. If you want to quote more specific details, such as their address, then of course we can, but it won't affect their cash flow, of course. What we do want is a value. So let's pop in the value, current value of, let's say, 500,000. It's important to remember when you change a value in an item, then you should tell the system when that information was correct. So here we have a date to say that the value is up to date by pressing T for today's date. Now, that keyboard shortcut is very useful, and of course T for today can happen in any date field, and that tells the system these are the latest values. Never change a value though without changing the date, or vice versa. Don't change a date on an item without changing the value that date is controlling. Okay, and finally, remember to save it by clicking the Save button at the bottom. Now, the beauty of using templates for data entry is that you don't need to input data using the fact find, this interface here. Templated items will appear in the planning statements. That's these options across the top. And wherever you see an item description, you can double-click to go into it and change it. So let's ignore the fact find interface for now and look at fleshing out the rest of our cash flow data straight from the planning statements. It's worth noting at this stage that the statements you open in Truth appear like tabs in your internet browser. So as you can see up here at the top, we have a fact find tab, and clicking across here would close it down. So if I click on the net worth statement on the planning ribbon, this will open up a tab for the net worth statement. Note how a new tab is opened at the top of the software. The text on the tab tells us which scenario and catastrophe we're looking at. If you'd like to know more about scenarios and catastrophes, then it's well worth attending one of our Level 1 webinar training series. The net worth statement focuses on your client's assets and liabilities. On the statement, we can see 4 columns. So client, partner, joint, and total. We can also see subtotals by asset class, and at the very bottom we have a total figure. You can customize the asset class headings in settings, so if you wanted to create different headings specifically for your asset classes, you can do so, but that's beyond the scope of today's training. If you want to know more about how to do that, then you want to attend one of our Level 2 webinars. Any values we've entered on the fact find will appear in here. For example, we can see that the value of the joint property which we entered earlier is now showing, of course, as the £500,000. If the property were owned as tenants in common, and of course at the moment it's showing under the joint column, then we could change the ownership within the item. The net worth statement will then show the value divided between them under their respective columns. If either of them owned other properties, for example, buy-to-let properties, we could add these as additional items from the fact find. As we build more information into the model, each of the planning statements will show a more engaging and accurate illustration of the client's position. Our template contains a few simple assets. Double-clicking on an item description anywhere in Truth will drill down into the fact find details for that item. Let's double-click on Cash on Deposit here at the top, directly from the net worth statement. And then we want to enter a value. Remember, of course, that if we change a value, we want to change the date that goes with it. So don't forget that keyboard shortcut. T will give us today's date. We could, of course, change interest rates or ownership at this stage as well if we wanted to. If you want to enter more items, for example, if a client has multiple bank accounts, maybe you want to put in their ISA details or more specific investments, then we can do so via the fact find. To keep things simple, we'll stick with one item for this client. So we'll save that. Okay, now when you save policies or investment items which don't include payment history, you'll be asked if you want to add some. If you want to record, for example, your client's ISA contributions, then it's definitely worth putting these in as payments into a product rather than simply including them as expenditure, because the system will then know the effect on the item's value. For now, though, we will click No. It's worth noting again that although multiple items of the same type can create a more engaging picture for clients, it isn't necessarily a prerequisite for producing an accurate cash flow. Putting all their cash holdings in as a single bank account is a quick way of arriving at a usable cash flow model. Showing individual items can, however, help with inheritance tax or income tax calculations and can help your clients to be financially well organized. And we carry on working through the net worth statement, adding values as we go. So for this investment item, I'll put in the value of, let's say, £50,000. And again, pressing T for today's date. Okay, I'm happy with the growth rate, noticing that 4% matches what I used earlier from the overall settings. So now let's look at what happens when we don't need an item that has come from a template. In this case, let's assume that they don't have a mortgage. To delete an item, we'll need to pop back to the fact find. Now, we can either click onto this tab here because it's already open, or we could click the button here, which will take us back to it. Now, if we want to find the mortgage item, remember to find from the list of filters the items we have. And if you're finding that the list is too busy, you've expanded too many things, you can, of course, collapse the list and then start again. And now we've found our mortgage item. If we don't want the mortgage item, we can then delete it. Same principle as before. You can press delete on the keyboard or press delete on the right-hand toolbar. And in this case, I'm going to say yes to delete, and it is gone. Okay, let's move on to their pensions. And pensions are a little more involved. Of course, we can add a fund value on the fund value tab, but we may also want to consider their pension contributions as well as how they intend to take the pension benefits. So we need to go into the pension item. Let's go back to the net worth. So we're going to go into Jane's pension and enter a value. There's so much information in each item, we can't fit it all onto one page. So what we have, of course, are different tabs across the top, again, just like your internet browser. And the tab we're looking for, first of all, will be the Fund Value tab. From here, we have a default of just £1, which meant that it showed on the statement. What we want, though, is to specify the latest value. So if I delete that entry and click onto New, to add in the latest value. You can, of course, build up a history of what the value has been over time. So with Jane's pension, if we don't specify any pension benefits, then of course we'll see that the fund value will continue to grow. It'll grow by this growth rate here, and of course any contributions that are being made as well. So those will be entered on the payment history. But to tell the system that no benefits will be taken, that is the Benefits tab, and by leaving it empty, we will not be touching the pension at all. Okay, let's click Save. And let's go and have a look now at Peter's pension. So we're going to put a value in for Peter's pension, and that means, of course, going to the Fund Value tab. And let's say that this time he has got a much bigger pension pot. Let's say that he has £1 million in his pension. Now this time I want to specify some benefits to show that he will be taking money out of that pension pot. So you go into the Benefits tab, and let's say that Peter is going to take a regular 5% withdrawal from his pension fund. So to specify benefits, we click New. By double-clicking, it creates a new transaction. We want to say when he will receive it, so the most obvious option here would be to link to his retirement date. So in this case, we'll go to the key date drop-down, choose retirement. As for how he's going to be taking his pension, well, we want to look at choosing that we have 25% tax-free cash, and of course that will apply on each year's withdrawal. So what we're taking is a regular lump sum amount. So annually, he's looking to take 5%, of which 25% will be tax-free. So we've got the details we need for his pension. We're going to click to save that. And here we can see with the crystallizations table as to how his pension pot might be crystallized, of course, with a value each year, the tax-free cash portion, and what happens to the fund as we scroll forward. So we have his pension benefits. If there were any lifetime allowance charges incurred, then we would also see those here. But doesn't apply in Peter's case. Let's save Peter's pension and no contributions. So we see a little warning has appeared, and this is to do with the pensions, to say that he's ultimately going to have a possible issue with regards to pension details. We'll come and look at that at a later date. For now, let me just close that warning message and look at this lifelong chart. What the lifelong chart shows us is what's happening with regards to their assets. The lifelong chart looks very different to what we had previously, of course. You can see that Peter's pension is growing tremendously. And of course it's accumulating up to age 65. But then the fund value starts to dwindle a little bit. There's still some values in there, which of course relates to Peter's and Jane's pension as well. So they're not completely depleting their pension pot, but we see that they are taking some money from it. We've now finished with the client's net worth. We can see that they have just over £2 million of assets right now. However, their liquid capital, which is what we're really interested in for cash flow modelling purposes, is just over 70,000, which is a combination of these two categories. And that's represented with this lifelong chart here. In case you're wondering why their liquid capital is rapidly escalating in this lifelong chart, well, it's because we've not entered any expenditure details. We've put in salaries and pension benefits, so there's lots of income in, but it's not being spent. So we will look at expenditure later on, but for now, though, let's move on to the income statement. So I finished with the net worth statement. I'm going to close this one down. And we're clicking onto income to open up the income details. As we can see here, all the income detail that we've entered on the fact find pulls through to the income statement. This information will feed through to the income tax calculation on the next tab. Before we look at that though, it's worth noting that we also see a line here for interest from the cash on deposit. Any interest, dividends or income from investments and policies will appear on the income statement. All we had to do to input on the investment items were the latest values and interest rates. Truth will then determine the income for the year and will then accurately calculate the client's income tax position. In any planning statement, we default to showing the current tax year, or in the case of net worth, valuations as at today's date. If we wanted to take a look at our position at any future date, we can do so very easily. The lifelong income chart shows us that Peter and Jane have a very different income position in retirement. If we wanted to investigate this, we can use over here on the left on your display options, we can use the up and down arrows, and of course we can scroll up and down. But things aren't really changing for a while. So instead what we might want to do is to either click play, which will let it scroll forward. The time delay, of course, can be adjusted. That's again under software settings. But in principle, what we can see is that it will just keep animating until we choose to pause it. But sometimes you might want to jump to a particular point in time. So if we click on the year that's mentioned here, then we get a chance to jump to any point in time. And if we go to retirement, we can look at their income position in the year when they retire. One thing worth noting here is that we have a prorated income for their employments. So we can see that the pension has started to pay out. And of course we can see that we've got also a part year of salary details as well. So if we want to see their normal position when they've retired, then we might want to go forward one more year. We can then see that their employment income has stopped. We have their normal pension drawdown income, of course, or F plus in this case. And so we can see what their income looks like in their retired position. Part of it is taxable. And because of the way we chose to do Peter's income, we've got, of course, part of his tax-free cash entitlement being used up every year. So we can see, of course, the income position in today's terms, and we might want to go forward to see other details, such as when state pension might start. So if we continue to go forward, then we may notice, of course, other entries will then come in as well. Okay, so we can jump to any point in time to see what it'll be. Again, the figures are in today's terms, but in principle, what we've got now is, of course, the future income tax position. Okay, but let's jump back to the start of our projection. So on the left-hand side, remember, click the year, and let's go back to projection start. I'd like to take a quick look at their income tax position. Now, every statement has multiple tabs within it, and clicking on these allows us to have a look at a breakdown of the information displayed on the main statement tab. Let's follow Peter and Jane's income through the various sub-tabs in the income statement. On the income tax tab, we can see any personal allowance or personal savings allowance to which they are entitled. We can see that if we were to amend Peter's income to a much higher figure, then his personal allowance would automatically taper away. We can also see that Peter and Jane are both paying basic rate tax on the first £37,500 of their taxable income. Peter then pays higher rate tax on a further £40,000 and Jane on £10,000. Now there is a misconception that cash flow modelling is all about the cash flow chart. Well, that's not always the case. Perhaps your recommendation to this client would be to forego income and increase their pension contributions. Just like a hypothetical cash flow, we can produce a hypothetical income statement for a what-if scenario, showing a client their income tax savings. Their cash flow might look worse in that scenario, at least in the short term, but behind the scenes they may be paying less income tax. The cash flow statement isn't necessarily the be-all and end-all when it comes to advising clients. Now, let's take a look just for a moment at the next tab, Net Spendable Income. This provides a concise summary of a client's income and any tax payable and national insurance. And then, of course, what they're left with down here at the bottom, this tells us what they have available to spend per year, per month, and per week. As we talked about what we were looking at on the net worth statement, the main purpose of these statements is to provide the clients with the opportunity to validate the assumptions we're using to build their cash flow. So do these numbers look right to Peter and Jane? Do they have roughly £8,700 or so every month after tax? Well, of course, we need to look at their expenditure as well. So if we move on to the expenditure statement, we can see we have more useful defaults that have come from our template. So do Peter and Jane have expenses associated with the house, such as insurance or maintenance costs, etc.? If so, we can put these into the property item. Remember, wherever you see the property description, just double-click to go in and amend the item. To enter the expenses, we're looking though for the Personal Expenses tab. And here we can see the potential to have a lot of detail with regards to their annual expenses. Alternatively, we can just put a number into the existing household expenses figure, into here. Because remember, we are using a basic template, and of course we might want to keep things very simple. We don't need to enter expenses associated with property at all, even. We could remove a £1 figure, and the line would disappear from our expenditure statement. But for now, let's put in an annual figure of, let's say, £250 in the house and contents insurance. And then into the household expenses, let's put in a figure of, let's say, £6,000. Remember, these are annual expenses, and also in today's terms. When we save the item at the bottom, then what we will see is that the expenditure statement will now show two separate entries for their household expenditure. Well, let's move on to the personal expenditure. We can break this down into as many or as few entries as we wish. In the case of this template, we have two: essential expenditure, being all the non-household expenses, such as bills, loan payments, etc. Discretionary expenditure is everything else, all the fun things like holidays and hobbies. The amount of detail we choose to enter here will come down to the client's needs. We tend to find that clients engage more with a model that closely resembles their lives. If we just put in a single line for annual expenditure, let's say £100,000, this will produce a working cash flow, but it isn't going to give our clients a very engaging picture. Hopefully, as we present to our clients, the decision to build more detail in the model will be led by them. We can ask leading questions such as, do you anticipate your expenditure changing when you retire? Or do you see yourself continuing to drive into your 80s? These help us to build a more accurate picture of a client's outgoings, but also help the client take ownership of the model. For now, let's stick with these two items. Again, we can double click to open, so let's start with the essential stuff. It's always best to enter monthly figures where possible. Truth will pro-rata all your income and expenditure based on start dates and end dates. If your client's birthday isn't in April, then they probably won't receive 12 months' worth of salary in the year when they retire. If we want their expenditure to change at some point, then of course using monthly figures works best. Okay, so we've got monthly as our frequency. The same is true of the start date. If we wanted to pro-rata the expenditure for this year, we could enter a start date here. But leaving it blank assumes the expense is ongoing, and for the kind of item we're dealing with here, it's typical that it is an ongoing expense. Okay, so let's put in £4,000 per month as our current essential expenditure. And you'll notice how we can include future tiers of expenditure. So this £4,000 per month can continue up to a calendar date, or an age, or key date. In this case, we have the retirement key date selected, and that's when they will change and will be more active, we hope. And of course, we can say what their expenditure will be at that point. If we want to, we could keep the figure the same, of course, but whatever we choose, ultimately, we need to make sure that the client is comfortable with those details. But essential expenditure generally won't change too much in retirement. So in this point, I'm going to assume that their expenditure, in fact, will stay the same across the whole of their lifetime for their essential expenditure, remember. Okay, let's save what we've done for that one, and let's go and have a look at their discretionary expenditure. We're going to do a similar element here. So we'll say how much they're spending on their personal bits. So £2,000 a month up to their retirement. But when they've retired, maybe they want to go on holiday more, eat out more, whatever's appropriate. So their discretionary expenditure might increase post-retirement. However, there is going to be a stage in life when, of course, they won't be as active and they might rein in their expenditure. We have a second key date, of course, from our template called later life. It's currently set at the end of their projection, and it means that, of course, we can then adjust it to say as to when it should be during their lifetime. It's going to be a change to their overall expenditure and things will reduce a little bit more. So I'm going to assume that their discretionary expenditure will reduce down to, let's say, £2,500. Cool. So we've got our details. We have what we need for our discretionary expenditure, what they're spending personally, and let's save that item off. We now have a nice picture of Peter and Jane's outgoings. Again, these statements give our clients the opportunity to validate, agree, or disagree with the assumptions we've used. It's crucial that these numbers relate to the reality of their lifestyle. Otherwise, we can't draw any useful conclusions from their cash flow. For many people, though, the cash flow is the big reveal. They might have a good awareness of their assets, income, and expenditure, but have no idea about whether they have enough to see them through. In truth, the cash flow capital chart shows clients their liquidity position for the rest of their lives. Will they have enough based on current assumptions to fund their desired future lifestyles? Well, for this, we're going to need the cash flow statement, of course. As we click, it's going to open up into the inflows, outflows chart. Now, I've chosen to have that by default. Personally, I think this is a better logical sequence to progress through to say what's looking at income, what's happening against their expenditure, rather than going straight into the capital chart. Now, as we progressed through the different statements to arrive at their cash flow, there's a sense that this is our destination. But really, it's not. When we go to the capital chart and show them what capital will look like, it ultimately is just the start of many discussions to have with a client. What courses of action we'll be looking for, what assumptions need validating or double checking. So up to this point, we've really just validated assumptions by going through with them, talking about figures, and collaboratively, in terms of their net worth, income, expenditure, we've established what we know so far. Now we can work with them on making their desired future lifestyle sustainable. The beauty of Truth is that it allows you to investigate any number of dynamic solutions to cash flow problems directly from this cash flow statement. We have different tools down the left-hand edge, and of course we can use different scenarios to show different outcomes. We can use our key dates to look at possibilities, but all of these tools, I'm afraid to say, are for another session. This is sufficient for what we have for today, I'm afraid. I'm going to have to leave it on a bit of a cliffhanger. Apologies. Now, if you'd like to know a bit more about this template, then please let our support team know. We can make a copy available to you and a useful guide to go with it. If you have any questions, comments, or feedback, for example, if you'd like to know more about any of the other menus, then please ask in the chat after you've finished the training session, or of course contact our support team. Thanks for joining us today, and of course thank you for obviously being part of this Creating New Clients Using Templates webinar. Do stay around and get involved in the Q&A session. If you have any comments, questions or feedback, we would love to hear from you. Thank you.